Let's begin our business of shaping policy for today by looking at the new proposed minimum wage. The advocacy for a new minimum wage has assumed a new dimension as the Nigerian Labour Congress is proposing a sum of 615,000 naira as new minimum wage. This is given by the economic reality and some of the factors they identify that there's a need for review according to the National Minimum Wage Act. What will be the position of the federal government as it has set up a 37-man committee to review the minimum wage? Let's find out what our in-house guests will have to say about this. We're being joined by SOUQ Orovwoje, as usual. Glad to have you join us this morning.
Good morning, Femi. My pleasure to be here.
Good morning. Welcome to the show.
Good morning, Blessing, and thank you very much indeed.
Yeah, Adi, let's look at the advocacy for a new minimum wage. It's a global thing now. You have Canada, across the globe is becoming a factor and a force to reckon with, given the present economic reality. But let's start with Nigeria, where NLC is proposing a sum of 615,000 naira as minimum wage. How do you react to this? And I would like you to give us some of the economic factors that may be fueling the advocacy for a new minimum wage.
Thank you, Femi. Fundamentally, there's a principle by which you talk about wages or salaries. It's simply called COLA, and that means cost of living adjustment, which is a global phenomenon where from time to time wages are adjusted in line with the economic reality of any country. Be that inflation and other economic reality will impact negatively in terms of what people take away at the end of that. And that income or wage or salary may not be able to sustain their cost of living. Therefore, there's a need and there's a provision in the Constitution where the government has the responsibility to improve on the minimum wage. But the proposal that is coming from Labour, in my view, those demands are unrealistic. Those kind of money are not sustainable, in my view. Therefore, for the purpose of bargaining principle, maybe they put that threshold with a view to seeing how they can use that benchmark to negotiate from government. On the other hand, Labour alone cannot do this. The organized private sector, who are the major employers of labor, if you look at the cost of doing business in Nigeria, and you juxtapose that with the current salary demand, I'm sure most businesses will eventually shut down because they cannot pay some of those salaries that are being proposed, in my view. Therefore, a middle ground must be reached with engagement, particularly from organized private sector, which is the engine of growth. And I see 600 and something thousand be an unrealistic demand from Labour.
All right. Labour's demand for 615,000 naira minimum wage, in their argument, is based on the current economic realities. Now, you've talked about the ability of governments at different levels to pay. But we also find a trend that is not particular to Nigeria, where there are calls for minimum wage increase in some other countries of the globe. What do you think is going on, and how do you think the increase of the minimum wage will affect inflation that is currently being experienced by many countries?
Thank you, Blessing. I think the first fundamental that we need to look at is that sometime when we make comparison with wage demand elsewhere, we must situate it within the socioeconomic reality of those environments. So it's difficult, in my view, where you take a wage agreement from another country where the realities are different. I just wanted to underscore that point. There's a need to improve on the minimum wage, no doubt about that. Then when you look at the issue of purchasing power parity, so if I leave Nigeria and I'm comparing the $1 bill that I was spend elsewhere, compare it to the exchange rate in Nigeria, then I will not be able to find my way spending in those environments. The point is that the government needs to adjust the minimum wage, no doubt about that. But labor demand is unrealistic, is not sustainable, and most of their members will go, they will be thrown out of those space if this is, so I'm sure that if they have a real stakeholder meeting, and I hope this committee should be able to get to a middle ground where all parties to this can resolve the issue. There's a need for it, but the incremental percentage principle should be used based on the current inflation reality, but 615,000 or thereabout is a tall order.
Now, let's look at the capacity to pay now, because it's also part of the concerns. You have the federal government, and you have federal workers, you have state workers, you also have local government workers. Now, due to the removal of the first subsidy, which some funds were being saved, and that has helped to increase the federal allocation to states, even to local government. The argument on the part of labor is that the excuses that, okay, there are no money to pay or the capacity to substantiate this increase is not valid on the part of some of these state governments and local authority. What do you make of these analysis? We've accepted the fact that, yes, there's a need for a review, but it's also of concern to also talk about the capacity to pay, not just to put a figure. Because as we speak, there are some people, even some private organizations, who are struggling with a 30,000 minimum wage. Now, if it's going to be increased, how sustainable is that?
I think for me, I disagree greatly with labor. Where there is a need for the minimum wage, which is a constitutional provision, to have a minimum threshold at which employers of labor, whether public or private sector, with that minimum threshold, nobody goes beyond that. But sometimes it's not within the purview of labor, even though they are making demands on behalf of workers to pursue an agenda that is not sustainable in terms of capacity. So employers of labor will employ people based on their capacity to pay those wages, and payments, particularly in the private sector, is driven essentially by your contribution. What are you bringing to the table in terms of your ability to contribute to the bottom line? Then you can place a demand on management in terms of what you get. But then if you say even the organized private sector must pay a minimum of 615,000, where they are struggling, even with the core of operation, the cost of energy is there. Even the minimum wage, I don't like to mention that amount that you just talked about. Sometimes is discomforting when you say somebody takes that kind of money to which market? And that's a major challenge. So, but then 650,000 is going to be a difficult challenge to put through. Even within the principle and the concept of collective bargaining, from an industrial relation point of view, even labor, when they have a meeting with various management, particularly those affiliates that are unionized heavily, those discussions are not going to fly anywhere, because if you put the labor cost into the cost of production, you factor this new increase, then the entire business operation will have been wiped out completely. And I'm sure most investors will not be able to stay in business. So we have more people being unemployed.
All right. Regarding government's ability to pay minimum wage, let's take a trip to when the minimum wage started to increase and what it was at that time and what the current value of it would be if we were to look at it in real terms. So in 1974, when the minimum wage stood at 16 naira, if you adjust it currently to the inflation rate and everything, that would be approximately about 90,113 naira. In 1981, the minimum wage increased to 125 naira, but its real value actually did not increase. It even dropped from what it was at 90,113 naira due to inflation. It came down to around 54,231 naira. Now, even in 1998, when it was increased to 3,500 naira, it's still reduced in real terms due to inflation to about 28,620 naira. So we see that progressively, even though nominally the wage has increased, but in real terms, when you look at the inflation rate, it has actually dropped in value compared to what used to obtain in previous years. So given this, it seemed like when there's a nominal increase in the value of it, the wage, while it seems to be increasing nominally, the value of it has been dropping. What can be done? Because the government will negotiate with labor and come to a figure, maybe 100,000, maybe 200,000, who knows what it would be. But while the nominal value seems to be increasing, the value is dropping, which calls for further a need for wage increase.
No, naturally, across the globe, when you talk about nominal values in terms of the actual cash that you have, inflation has always have its blow on whatever nominal value. So that is given. But the point is, there's a need to increase that wage. And when you do that, naturally, everybody wants to put their own costs into that increment. So that will spark up some form of inflation because the market woman wants to take his pie. And I recall through some readings or study in the past, when the Udoji Award came in the 70s, the price at which things went off in Nigeria just changed dramatically because of that. So I'm for wage increase. But if you look at those figures that you just rolled out, and you want to compare in terms of the value of the actual money in terms of nominal increase, if you follow that trajectory, then I think we're going to have a problem. So I think what organized labor, the labor movement should be talking about is to what extent can government provide incentives to workers to reduce their expenses. For example, do you provide buses for workers that take them to and fro work? Do you provide some essential commodities to the workers that can relieve them of some of the excruciating factors occasioned by the level of inflation? So a welfare mechanism will help the government to readdress that part. On the other hand, the private sector can't pay those money. So when they are doing their negotiation, what they can do is to see how they can put certain non-monetary package into the salaries and wages they pay so that they can reduce the cost. So companies can invest in providing an accommodation that is close to place of work that will reduce transport depending on the values and the offerings of those staff to the performance of the organization. So if you have a mix of non-monetary and some other welfare package, and the government, particularly the central bank, we has to work on the rate of inflation, then the fiscal discipline on the part of government to reduce the waste will provide a sustainable way where we can create a wage regime that is sustainable for everybody across the country. But 670,000 is a wishful thinking, in my view.
All right, I heard you. You said you're not against the review of the minimum wage, but you're not comfortable with 615,000 naira. So I put this to you. If you had to put a figure on the table, looking at the cost of living and economic realities, how much do you think would be suitable to be proposed as new minimum wage?
As I speak here, it might be difficult for me to try to put a figure to it, because that might be a dangerous precedent.
Just create a benchmark.
No,
It's
no,
just
I
for
won't do
sake
that.
of
I will underscore what you're trying to say, and
Yeah.
I will answer it. But I'm not going to put absolute figure. That would be misleading to the public. So the point here is that let's wait for the outcome of the committee that has been set up to review the minimum wage. There are documents on the table for consultation, for negotiation. Two, there must be a deeper engagement with the organized private sector. What are the current reality, looking at the cost of doing business in Nigeria? Then those who are stakeholder in that industry should be able to come to terms with what is appropriate after a consultative engagement with the stakeholder. So it might be dangerous to provide or try to provide a guess of what that earning should be. I don't think I'm in a position to do that.
All right. Now, trying to understand the rationale behind the 615,000 minimum wage proposal, what do you think is the reason for it? Is it that labor is trying to take it up there so that government doesn't bring it down so much? Or it's just, it looks like this is going to make the argument or the negotiation very long, because yes, we do not know what government would propose as well, or what we would negotiate. But from 615,000, what do you think is the rationale in the first place why it was taken that far?
All right, they may have done their research, and they will have taken some regional, continental, and international benchmark based on convergence of currency, looking at the way the naira is. That's number one principle they may have used to derive at those figures. But then in the principles of negotiation itself, one of the principles is called splitting the difference. I'm just sitting here and I'm thinking that going into a kind of collective bargaining principles that labor do with management from time to time, it brings some kind of figure that will spice their negotiation skills to the table. So therefore, I'm sure they will have come to a median figure that that they can bring to the table for negotiation. But like I mentioned earlier, by the time the committee look at the various rationale and the assumptions that are before them, they'll be able to come to a conclusion. But sometimes you go into a negotiation with a bigger pie so that you can have some wins. Sometimes it's difficult when you have a situation where you think you can win alone in the negotiation. So if you come with a mindset of a win-win scenario, that might provide you some basic gain when you are negotiating. But like I mentioned, it's too early in the day. Let's see the committee that comprise organized labor, civil society, and everybody within that ecosystem, and they are able to look at those assumptions, and those assumptions will be debated. And at the end of the day, based on their judgment and the reality of the time and the mandate of the president within the constitutional provision that is there, a figure will come out. And I do know that in every negotiation, there are opportunities to shift ground and make some compromises here and there to be able to strike a deal.
If you look at the global threshold for poverty, which is at $2 per day, you realize that the 30,000 minimum wage, it's overdue for review. But the question some Nigerians are putting to the Nigerian Labour Congress is that the labor movement should focus more on the welfare of Nigerian workers rather than talking about minimum wage all the time. Talking about health insurance, you want to talk about the total package for the welfare of an average worker in Nigeria. What's your take on this?
Absolutely, Femi, you're very correct. Because sometimes when you look at the compensation package, more often than not, people are drawn into the monetary aspect, which is a fundamental base in terms of remuneration and compensation, where people see money as the only motivating factor for deliverable. That is not the case, even though there are some scientific theory to prove those points. But then the focus should be more on how they can engage with government in particular to see where they can make transportation policy that will favor a greater number of people, so people don't put their cars on the road. So you can get your car to a certain level and use the train to get to work, which are relatively cheaper compared to your personal investment. Number two, even the private sector should focus more on welfare, and the government should focus more on trying to see how they can develop social housing schemes for the workforce in general, whether private sector or public sector. Then other policy initiatives like the health insurance you talked about, where you make a minimum contribution, if you're between 500 to 1,000, and you're able to assess some high level of medical service that are not involved in surgical services. Therefore, the pressure on the workforce in terms of the monetary provisions that's the money side of the earning, the pressure will reduce and everybody is happy. So the mix, and in my proposal to them as the committee meets, is that they should look at a mix of a 50-50% ratio of how they can encourage private sector to improve on non-financial package, focus on welfare, and let's see how government, with the new scheme of the president trying to build some houses across the 36 states of the Federation. If we're able to do that kind of arithmetic, then things might be okay. But I'm afraid if these proposals for over half a million naira package as a minimum wage, I think that's too daring from Labour, in my view.
As a follow-up to whatever will be the new minimum wage in Nigeria, should there be some form of price control? Because you mentioned earlier that once minimum wage is increased, everyone is trying to get their own out of it. And that will simply out every time minimum wage is increased for government workers. The prices for items in the market increases, sometimes rent jumps up. What should be done?
I think the issue is there's a current debate in terms of whether there should be a price control for and against. I think we should just leave things to the forces of demand and supply. But then the government has a responsibility in terms of how they can control lending to businesses. Because once the interest rate is managed in a way that people can lend money and they're able to do business appropriately, they don't need to pass the cost of the operation to the consumer. So I think that's the major challenge. So once the cost of transportation of a farm to the market has risen astronomically into the ratio that when you now get your produce into the market, the woman who sells those commodities must pass the transportation cost. So we need to control the other mechanisms that will help to have a sustainable pricing regime that is good for the citizen. But a blanket price control mechanism may not work based on the capitalist structure that we currently run.
Now, let's look at the provision of the new minimum wage act as regards payment of minimum wage. The obligation on employers to pay this minimum amount. You discover that certain employers, they don't. Even some state governments or local government, they don't. What should be done to ensure that, since it's been stipulated as part of the provision of the law, you look like Section 9 of the minimum wage, stipulating this obligation on employers to pay, because once this is being signed into law, they are obliged to pay. But you discover that most of the time they don't. What do you think can be done? Perhaps this should also be part of one of the responsibility of the Nigerian Labour Congress, or whose responsibility it is to ensure compliance with this kind of payment.
Yes, there are two sides to this debate or discourse. Number one, when it comes to the issue of contract, though there are minimum wage thresholds, once you go into a contract, there are three elements of the contract: the offer, the acceptance, and the consideration. So once you go into a contract arrangement and you sign into a contract, that means that offer and acceptance, once you engage with that kind of scenario, you sign in that I'm willing to take the job. So sometimes employers are covered within that regime. On the other hand, once you subscribe to a minimum wage threshold, it behoves on the Ministry of Labor and Productivity to enforce that minimum thresholds. There are countries where once you step down below that minimum threshold, it becomes an infraction into the law, and they will do the needful with you. So I've answered that in one breath. So we need to find a way where a tripartite arrangement is made between organized private sector, the labor movement, and some regulatory agencies that are responsible in terms of how people can keep to term with government policies, particularly when there's a constitutional provision that people should not be paid below certain element. But if you look at the pool of unemployment in the country, people jump at certain elements where they can even have something, where they can get some respect. And you know, when you have something you're doing, you earn some respect, and you can have some sort of bargaining with that. So if somebody comes to you that he wants to get about 10,000 from you, if you know that he's employed, there's the hope that you'll be able to recoup that borrowing.
What are your thoughts on the CBN's decision, the new policy and directive to deposit money banks to slash the loan-to-deposit ratio to 50% and adhere strictly to it?
Wonderful policy statement from the CBN, and I think this loan-to-deposit ratio percentage increase in terms of what the bank should be doing is a welcome development that will help to reduce inflation, improve on the lending ratio, even to the real sector. So I think this is a policy framework that is welcoming, and that will help to sanitize the challenge in terms of lending, particularly from commercial banks and even microfinance and some other financial service provider in the country. I think it's welcoming, is comforting. But what is important on the part of the Central Bank of Nigeria is to step up its supervisory framework to see that the books are not altered and that they are in line with the provision. And once there's any infraction from some of those banks, even a greater sanction of him pulling out even the license of those banks should be put in place so that it serves as a deterrent to some other banks in the industry who will not respect the prudential guideline as provided by the CBN. So for me, this is welcoming, and I think that will help to reflect the economy in terms of lending. On the other hand, the banks must be careful as well. There's what we call mismatch in terms of lending or loan vis-a-vis deposit, because at some point people want to record their deposit. Once there's a mismatch between your deposits and your lending, then there's a problem and there may be a run on the bank. But the CBN, in our own wisdom, has already put a proposal in place where the bank need to shore up their capital for the next 2 years, and that will help to a large extent to reflect the economy.
Now, the decision of the CBN to review the LDR from 65% to 50%, what do you think would be the implication for commercial banks, especially when it comes to liquidity, when it comes to the lending rate, and also lending to the general public, and also to what you call their own form of deposit? What will be the impact of this decision on commercial banks?
I think the central bank, before coming with this policy statement, will have looked at the various basic principles that guide banking principles and practice. They will have looked at the capital adequacy ratio. They've looked at the liquidity ratio, your ability to be able to recall your investments in case there's a demand from depositors and your lending, some of your lending loans have not fallen due or they are default in some of those loans. So I'm sure the bank naturally will have been consulted before this policy statement is put in place. But then it behoves on central bank in terms of strict supervision. So at the end of the day, the banks do not find a way to navigate some of the other ratios and trying to cover up this window that will strengthen lending, which will increase the activity, economic activity in the nation, and thereby you can reduce inflation. You can create some activities that will create some growth and some development based on that opportunity or window that has been provided by the central bank.
On the other hand, doesn't this new policy make it more difficult for businesses to access loans from deposit money banks?
No, I don't think so. When there's an improvement in the ratio of your lending, that's lending here is your loan portfolio. So on the balance sheet, you have the asset and the liability side. Why the liability side, that's the money that you have given out, then there's a constant demand on the loan officer and the man that is bringing the deposit. So there's a window now that has improved where the government has said we have reduced that window tangentially to enable you to operate more efficiently so that you can get money into the marketplace for people to borrow. And when they borrow, then there's more economic activity, there's more employment, people are able to save. Then disposable income that are available to people will be more. Therefore, that will improve on the lending capacity and capability of those banks based on this new window, which I think is a very big spread. So more people will be able to borrow from the bank. But the challenge, on the other hand, is we had moved the borrowing capacity by a commercial bank from the CBN to a certain level, and that will continue to haunt the ability to lend, but the window of lending in terms of what they can carry on their balance sheet has been improved.
Let's talk about the review of the capital base, which the CBN is also looking in that direction for banks. If you look at the essence of this kind of policy, is to further, strengthen the banking sector as a result of the monetary policy of the CBN. But now the CBN has also indicated the reason or the need to also increase the capital base for banks. How soon do you think this should be implemented to ensure that we'll be able to achieve the $1 trillion economy that has been proposed?
I think the policy framework is very clear. It will take the bank 2 years to be able to get to those levels. So if you have a license for international banking operation, the level at which your capital, so there are various benchmarks in terms of international banking, national banking, regional banking, and some other specialized banking. So to that extent, therefore, within the next 2 years, which is October, if my information is right, October of 2026, this will have come into fruition. So Therefore, there are likely to be disruptions in the banking sector, disruption in terms of measures and acquisition. Some of the banks may not be able to raise the money. So the big sharks in the market will swallow some bank. And what happened during the Soludo era, in my view, is likely to happen, so that the banks are strong, they are sound, their level of liquidity is high, then that will equally affect their profitability. So their risk appetite as well will increase. To that extent, that policy framework is in order, in my view, and that will help to stabilize banking, to improve on their liquidity, to improve in terms of the ability to do international business and support even manufacturing and small and medium enterprises.
So on a final note on this, what would be the implication of the reduction of the loan to deposit ratio on the cost of transaction?
No, like I said, there's still another leg of this. The window in terms of the ratio of lending or loans to deposit, and which I just described, two sides of the balance sheet, liability and asset. So there's a bigger window at which you can lend based on your deposit ratio. So more money will be available for lending. But the challenge, on the other hand, is that there's more money for lending. But the issue here is that you are giving money at 24.75% to commercial bank. Therefore, if you look at the margin at which commercial banks will lend to the real sector, that might be another challenge for the banks and for those who are borrowing from the bank.
All right, we just have to leave the conversation here. Thank you so much, Sam, for your thought and your submission on the issue of LDR. Let's hope the CBN governor, in its own wisdom, will be able to do what is needful to ensure that banks are getting better and bigger, like we always say here.
Early exchange, shaping policy, advancing development.